One common misconception banks propagate is the notion that money appreciates in value when kept in a bank account. While the numerical sum may increase due to interest rates, the real-world worth of that money often diminishes due to inflation outstripping the interest earned. In essence, hoarding cash in the bank is more akin to a slow financial leak rather than an investment. In this discussion, we will outline 6 assets designed not just to plug this leak, but to build a reservoir of intergenerational wealth. Number 1. Precious metals: gold, silver, platinum, the unshakable trio. First and foremost are what's often termed as God's money, the precious metals like gold, silver, and platinum. These timeless assets are highly valued precisely because they serve as reliable stores of value. With governments continually printing money to meet their ever-growing expenditures, the purchasing power of your dollar can become volatile. This is the principal reason why seasoned investors often set aside a portion of their portfolios for precious metals. To put this into perspective, consider gold. In the early part of the 1950s, an ounce of gold could be acquired for $400. As of 2023, that same quantity of gold has appreciated to a value exceeding $2,000. Financial analysts like those at PrimeXBT predict this could escalate to around $10,000 by the year 2032. That translates to a 5-fold increase in roughly a decade. While paper money depreciates, gold and other precious metals generally appreciate, especially when inflation rates soar. If the notion of physically owning and storing gold doesn't align with your investment strategy, there are other pathways. Gold exchange-traded funds, or ETFs, offer an efficient and affordable alternative. These investment vehicles track the price of gold and can yield returns that closely mimic those of the physical asset, without the hassle and risks associated with storing the actual metal. Understanding the drawbacks of relying solely on bank savings for wealth creation and considering diversification through assets like precious metals can fortify your financial future. Such a balanced approach can not only preserve your wealth, but also provide opportunities for significant growth, thereby securing financial stability for you and future generations. Number 2. Industrial commodities: more than just shiny objects. While scarcity contributes to the high value of precious metals, their intrinsic utility also plays a part, making them essential for various industries. For instance, silver is crucial in making electronics, medical devices, and even nuclear reactors. Likewise, metals like cobalt, nickel, and copper are in high demand due to their unique properties that alternatives can't easily mimic. To provide context, since 2020, the need for cobalt has surged mainly because of its role in electric vehicle batteries. As a result, its price has jumped from $20,000 per ton in 2012 to $40,000 in 2022, a 1% increase over a decade. Consequently, having investments in such commodities can bolster your portfolio during times of high demand. Yet, not everyone has the capital to directly invest in these materials, nor the means to store or sell them. So, for most, investing in mining company stocks like Rio Tinto, specialized mutual funds, or financial derivatives such as futures and options offers a practical way to gain this exposure. Number 3. Safe haven currencies: the financial pillows. In today's age of fiat currencies, not backed by tangible assets like gold, geopolitical stability becomes vital for investment decisions. That's why many wealthy individuals store their money in Swiss banks. Switzerland, boasting one of the most robust economic systems globally, provides a stable geopolitical landscape. Consequently, the Swiss franc often serves as a safe haven asset during unstable times. This was evident during events like the 2009 Eurozone debt crisis and the 2008 global financial crisis, when large sums migrated to Switzerland to counter currency depreciation. The Swiss franc also acts as an alternative to the US dollar for international trading. For instance, amid the recent Russia-Ukraine crisis and ensuing US sanctions, Russia conducted trades in Swiss francs, causing its value to soar. By early 2023, one Swiss franc equaled 1.1074 US dollars, offering significant gains for its holders. Like premier currencies like the Swiss franc, British pound, and Chinese yuan are excellent stores of value, not everyone can easily open Swiss bank accounts. However, currency ETFs and forex brokers like Forex.com offer a way for smaller investors to obtain currency exposure, sometimes with as little as $100. Number 4. Sovereign guarantee, Big Brother's promise. Ever examined a dollar bill closely? It reads, "This note is legal tender for all debts, public and private." Ever wondered what that means? Since 1971, when President Nixon ended the gold standard, the dollar became legal tender by U.S. law, making it a universally accepted medium of exchange. Though not backed by physical assets like gold, fiat currencies are considered as good as the government that issues them, backed by the full faith and credit of that government. Simply put, your money's stability relies on the stability of the governing body. That's why investing in sovereign guarantees is seen as a secure store of value. A nation's government is generally the last entity to default. If it does, the whole country collapses. So it's typically a safe bet to invest in government securities or G-SECs, provided they have investment-grade credit ratings. Remember Greece's 2009 debt crisis? Institutions like the IMF, Eurogroup, and ECB had to intervene multiple times. Therefore, a government's global standing should be a key factor when investing in G-SECs. In the US, options like treasury bills, notes, and bonds offer exposure to sovereign guarantees. They generally yield better returns than bank deposits and are backed by the US government's global economic clout. Smaller investors can purchase these securities directly from the government via the Treasury Direct portal or on the secondary market. Number 5. Value stocks and mutual funds, the workhorses of Wall Street. Value stocks and mutual funds can offer better returns than treasury investments, which in turn outperform cash holdings. While treasuries come with lower risk, they also provide lesser returns compared to stocks. Investors often seek the higher returns that stocks can offer, although not all stocks carry the same level of risk. Generally, the stock market is segmented into two categories: value stocks and growth stocks. Growth stocks, like those in technology sectors, come with higher risk as they often hinge on unproven ideas or technologies. In contrast, value stocks, such as Nucor in the industrial metals sector, carry lower risk due to their established demand. These value stocks, when well researched, can offer both steady capital appreciation and reliable dividend payouts. However, for the average investor, researching each value stock's fundamentals can be time-consuming. Therefore, dividend-centric mutual funds like the Vanguard High Dividend Yield Index Fund Admiral Shares, known for their consistent dividend payouts, become an ideal and accessible investment avenue for retail investors. Number 6. Land and real estate, the evergreen asset class. Accountants categorize land as a non-depreciable asset, and rightly so. Its scarcity and perpetual demand make it invaluable. Since time immemorial, land has been essential for various uses: housing, schools, factories, agriculture, and commercial spaces, to name a few. With an ever-increasing human population, this demand is unlikely to wane. Likewise, structures like residential homes, offices, and commercial properties also remain in high demand. Therefore, both land and real estate serve as effective hedges against inflation in an investment portfolio. A Bloomberg study illustrates that housing prices tripled from 1992 to 2020 despite the 2008 housing bubble hiccup. Hence, having real estate exposure proves beneficial when the dollar weakens. However, many small investors postpone real estate investments, often viewing it only as the home they reside in. While owning a home is a worthy asset goal for one's 40s, a stake in the broader property market is advisable at any age. Contrary to popular belief, you don't need massive capital to invest in real estate. Options like REITs or real estate investment trusts offer an accessible avenue. These function like mutual funds but focus on real estate. One popular US REIT is Ventus Inc. or VTR, which specializes in healthcare properties such as senior living facilities, research centers, and hospitals. Alternatively, you can also leverage borrowed money to own rental properties, using rent to cover expenses and mortgage payments while also earning a profit. Number 7. Collectibles, investing in rarity. Collectibles like vintage cars, rare art, luxury handcrafted handbags, limited edition watches, and first editions of iconic books are part of this unique asset class. For a typical car, its value halves as soon as it hits the road. However, the opposite is true for vintage cars. They appreciate over time. According to Autocar, the 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe was auctioned in 2022 for a staggering €135 million. Only 2 such cars exist, making them highly sought-after collectibles. Likewise, Leonardo da Vinci's controversial painting Salvator Mundi fetched an enormous $450 million in a 2017 Christie's auction, purchased by a Saudi prince. Wealthy individuals invest substantial sums in such limited edition items because they're timeless stores of value, capable of fetching astronomical prices from the right buyer. However, for the average investor, acquiring such collectibles might seem out of reach. That's where online platforms like Whatnot come in, offering avenues to buy and sell rare items like baseball cards, comic books, and action figures. Moreover, platforms like Convey and Masterworks allow for partial ownership in high-value collectibles, making this asset class more accessible. Thanks for watching. If you enjoyed, hit the like button and subscribe. Don't forget the notification bell for updates. Your support helps us make more great content. See you in the next video.